Hello, fellow investor. I want to welcome you to this channel. In this video, we're going to take a look at the earnings expectations for Nvidia. Nvidia is scheduled to report second quarter earnings on Wednesday, August 27th, after the market close. We'll cover several topics to see how Nvidia is trading going into the earnings and help set expectations moving forward. We will review the current price chart and trend charts along with some key valuation metrics. I'll also share Nvidia portfolio holdings and performance. Let's get started. I first entered Nvidia in November of 2023 and have traded the position 28 times through May of 2025. I currently hold 100 Nvidia shares at an average cost per share of $68.54. The total return is 41.6% on the holding. The return is 164.4% for the currently invested capital. For the 28 trades, 23 are winning trades and there are 5 losing trades. The gain-loss ratio is 4.75 to 1 with a win rate of 82%.
Nvidia is scheduled to report second quarter earnings on Wednesday, August 27th after the market close. In the previous quarter, Nvidia reported revenue of $44.06 billion, beating revenue estimates by $813.47 million. Nvidia reported earnings of 81 cents per share, beating estimates by 6 cents. For this quarter, the revenue estimate is $46.00 billion with earnings of $1.01 per share. Over the last 90 days, 17 analysts raised estimates and 17 analysts lowered estimates. Nvidia meets or beats analysts' one-year forward estimates 91% of the time. Nvidia is showing positive relative strength going into the earnings. The options market is pricing an implied move of plus or minus 6.9%.
So looking at the Nvidia one-year daily price chart, we can see that Nvidia did close up on Friday following the Fed chair's speech at Jackson Hole. That was after a decline for several days before that speech. It did close below the 20-day moving average on the 19th and is traded underneath that average, which is rising since that day. It is above the 50-day moving average and the 200-day moving average. If we look at previous earnings announcements, we can see on November 21st, following a double beat, that Nvidia did close up only 0.53%. Then on January the 27th, Nvidia dropped 16.87%. Despite a double beat. The price dropped on high volume following the DeepSeek announcement, creating fears that high-end GPU demand might be in jeopardy. Then on February the 27th, following a double beat, Nvidia closed down 8.48% on high volume, producing a bearish engulfing pattern. That's when the pattern for that day completely engulfs the previous day's body. That was concerns around AI capital spend weighing on the price. Over the last year, there have been several of these bearish engulfing patterns that have led to downtrends. We can see one here. We can see one here that led to a downtrend, led to a little downtrend. Then we saw this on February the 28th, which led to a downtrend that lasted through the tariff announcements. But since that point, Nvidia is up 98.37%. Then on May the 28th, after a beat on revenue and earnings, Nvidia closed up 3.25% on above average volume. Nvidia beats on revenue and earnings about 91% of the time. So analysts have a good track record estimating what the revenue and earnings will be. The RSI is above the midline, so it's in bullish territory, currently sitting at 55.63. We have very good momentum with the PPO being above the midline since the beginning of May. We do have the price moving higher while the RSI is declining, as is the PPO, called a negative divergence, which could weigh on price action moving forward. As far as the relative rotation graph, the relative strength is better than that of the S&P 500, while the momentum is slightly below that of the S&P 500. The accumulation is at a 52-week high. The money flow is also in positive or bullish territory. And if we look at Nvidia's performance over the past year compared to the S&P 500, Nvidia has outperformed by 23.95%. For the technology sector, Nvidia has outperformed by 20.02%. Nvidia is outperforming its industrial group, the semiconductors, by 6.06%, while the semiconductor industry group is outperforming the S&P 500 by 16.86. Overall, I think Nvidia is in good shape moving into the earnings with positive relative strength and positive PPO. If we look at the 5-year weekly chart, we can also see that Nvidia is outperforming its long-term averages after underperforming for 2 or 3 weeks here at the beginning of April. It is also outperforming its midterm averages. That is starting to decline a little bit, but it's still outperforming. And its short-term averages, it's also outperforming those, almost coming back to the midpoint. So if the price decreases, then it'll start underperforming those averages, depending on what the earnings report and how the market reacts to that earnings report will determine the final state of this performance in comparison to its shorter term averages. Next, we'll look at some key valuation metrics for Nvidia using Seeking Alpha. We can see that Nvidia has a 40.92 times forward PE compared to the sector at 28.34 times. So it is valued higher than its sector, but its expected revenue growth and expected EPS growth far exceed that of the sector, with the revenue expected 62.12% over the next year, compared to that of the sector of 7.48%. And then the expected EPS growth rate is 66.62% compared to that of the sector at 11.15%. Then if we look at profitability, we can see that they have a net margin of 51.69% compared to the sector average of 4.20%. We'll take a look at Nvidia in fast graphs to get a look at the valuation. We can see that Nvidia has an EPS yield of 2.12%. They do pay a very small dividend, yielding 0.02%. Over this 13-year period, they have had a growth rate of 52.83%. Their fair value ratio is 52.83 times according to FastGraphs. Their normal PE is 42.24 times. If we look at their earnings over the last few years, their earnings grew 288% in 2024, 131% in 2025. Then they begin to slow down to 48% in 2026, 36% in 2027, and the estimate is 16% in 2028. Over this 13-year period, they have traded below their normal multiple and their fair value, and they've also traded above it. Looks like April would have been a really good time to be buying into Nvidia. They're currently trading between their normal multiple and their fair value. If we look at the return estimates between the price today and the normal multiple in 2027, we could expect a total rate of return of 42.16%. or 27.61% annualized. I hope you found this earnings preview helpful. If so, please subscribe to the channel for future videos and consider giving a like to help support the channel. Thank you for stopping by. I wish you the best in your investment journey, and remember to trade well.